Stuart is now ready to compare the data for all 3 years. He first prepares a graphical representation of the data of the first year. The x-axis corresponds to the sales in units, and the y-axis corresponds to the costs and revenue in euros. The fixed costs line is drawn first. The fixed costs of €32,000 remained constant, and so the line for fixed costs is horizontal and parallel to the x-axis at €32,000. Stuart next plots the variable costs line. For each level of sales there are different variable costs. For 0 bicycles sold, there is 0 variable costs, and for the sale of 800 bicycles, the variable costs are €48,000. These 2 points are plotted on the chart, and the line joining the 2 points gives the variable costs line. Stuart now plots the total costs line. Even if the sales are 0, the fixed costs are still incurred, so the total costs consist of fixed costs only at 0 sales. Therefore, for 0 bicycles sold, the total costs are €32,000, so the total cost line starts from the point corresponding to the €32,000 on the vertical y-axis. The total costs at the sales level of 800 bicycles is €80,000. The point corresponding to the sales of 800 bicycles and €80,000 of costs is plotted, and the point at €32,000 and point at €80,000 are joined. This gives the line for total costs. Stuart next plots the sales line. For 0 bicycles sold, 0 sales revenue is generated. So, Stuart plots a point at 0. For 800 bicycles sold, €80,000 sales revenue is generated. Here, Stuart plots a point at the intercept of 800 bicycles and €80,000. When Stuart joins these 2 points, the sales line for the first year is obtained. Stuart can easily see the break-even point from the graph. The break-even point is the point at which the sales line and the total costs line intersect each other. The sales line and the total costs line intersect at the point corresponding to 800 bicycles. In the first year, the total costs are equal to the sales revenue, and the break-even point is at the sale of 800 units of bicycle. Similarly, Stuart constructs the break-even chart for the second year. He finds out that the break-even point in the second year is at 865 bicycles. If the number of bicycles sold are less than 865, Super Bicycles Limited will incur a loss. If the number of bicycles sold are above 865, Super Bicycles Limited will earn a profit. The actual sales in the second year was 1,200 bicycles, leading to a profit that year. The margin of safety is now identified from the graph as the actual sales generated above the break-even sales. Stuart sees that the margin of safety in the second year is 335 bicycles.